Hello and welcome to Business 360. I'm Archana Solanki. Here are the headlines we're tracking this evening. Sensex and Nifty end at the low point of the day. Mid-cap see a sharper sell-off. Rupee tests fresh record lows against the dollar before ending flat. Domestic institutional investors remain unfazed amid selling by foreign portfolio investors. Inflows into equity mutual funds rise more than 14% in December, even as the Nifty declines 2% in the same month. SIP inflows hit a record high of nearly 26,500 crore rupees. TCS expected to report a minor decline in quarterly revenue as the Q3 earnings season kicks off. Margins likely to expand according to a CNBC-TV18 poll. Stock declines and trade ahead of the earnings. SEBI's new sterner default rule pinches companies. The market regulator's November 18 circular says a repayment delay of even a rupee by a day, even due to technical reasons, would result in default classification. Does away with the leniency previously granted to technical defaults during the pandemic. 6 people are killed and 40 injured after a stampede at Tirupati temple. The incident occurred at a ticket counter where thousands had queued up for special darshan tickets. 50 people killed across Gaza overnight as Israeli forces continue their assault. Outgoing U.S. Secretary of State Antony Blinken optimistic about the prospects of a ceasefire. Parents of at least 800 soldiers and reservists write to Israeli Prime Minister Netanyahu and urge him to end the war. 5 people killed, thousands flee their homes as wildfires rip through Los Angeles. More than 1.3 lakh people are under evacuation orders as the blaze tears through iconic landmarks on Hollywood's hills. A Singaporean passport remains the most powerful in the world as it provides visa-free travel to 195 destinations. Japan ranks second in the annual Henry Passport Index. United States drops to number 9. Indian passport weakens by 5 places to number 85. Right here, let's start with the market action. Sensex declined by over 500 points. Nifty lost over 160 points as weakness persists on the Lal Street. Mid-caps underperformed the blue chips. Barring FMCG, all sectoral indices ended in the red. Prashant Nair is here with the market wrap.
Well, another tough day for the market and the Nifty Bank, broader markets all down and out. Actually, even sectorally speaking, indices were leading lower. Now, the Nifty still not at the December lows. That is still about 100-odd points away from where we left off today. The Nifty Bank broke yesterday's low, and that's in a clean way, making a newer lows, which is not a great sign technically. Mid-cap and small-cap indices yesterday underperformed and did worse as compared to large caps. And I think today was that story once again, especially the small-cap space. All sectors down, but the big ones were real estate, energy, and CPSE. Remember, the oil and gas space has done decently well over the last 2 weeks or so. So there was some selling pressure. FMCG, which has been down and out, and I'll talk about stocks in a bit, was the only large sector which was up and about in the green. I'll start with what was down on the Nifty. ONGC, BPCL, Coal India, Tata Steel Metals, and resource names, really, which were down. Shriram Finance had a big sort of move, I think yesterday and day before. Today it was taking it easy on the downside. What was up? Beaten down names, Bajaj. I think there was an upgrade from a broker. Kotak Bank, it's been one of those tactical buys which people have been pushing, recommending, did well. FMCG, Nestle, Lever, Britannia, Tata Consumer, all nifty names which were up between 1 and 2.5%. Broader market, some 3:1 declines outnumber advances. So here, the losses coming through in Aegis Logistics. But remember, some of these stocks are coming off very, very large gains. Kalyan, something similar. I think has lost about 10% this week, maybe a little more. ITI, another, quick mover in 2025. The few days that we've traded so far came under pressure. Spandana, something similar, recent sharp gains. MobiKwik, reversal from yesterday's gains. Oil India, PCBL, Hutco, Ami Organics, and Dhani were some of the other names which were down. Winners coming through these chemical names, SRF and Naveen, there was news flow. IGL did well. Balaji Amines, Alkyl Amines, both were up sharply. Colgate stood out. Zydus Life, there was a brokerage upgrade. Mazgaon Dock on the defense space. Aarti Industries, another chemical name there. GIC RE, Religare, positive news for those especially expecting change and control there. And a hotel company like Sami did quite well as well. Remember, US markets are shut, stock markets are completely shut, bond markets shut early. News flow, I think, will continue to hit us, but no price action as we come back tomorrow morning. Back to you.
Right. Thank you, Prashant, for that. On to the money market action. The Indian rupee weakened further to hit yet another record low versus the dollar. But most of the losses were wiped out in late trade and the rupee ended largely flat. However, $1 is now worth nearly 86 rupees. 8-year bond prices have also come under pressure, leading to a spike in yields. Domestic investors' appetite for equity-based mutual funds remained intact in December despite market volatility. Now, inflows into equity mutual funds rose 15% last month despite a 2% drop in the benchmark Nifty 50 index. Indian stock funds have now seen net inflows for the 46th consecutive month. Now, Rupee Upadhyay is here with more. Rupee, take us through the key trends from the AMFI data.
You know, equity investors have really kept the faith in mutual funds. And even as the market has been consolidating and many stocks have been correcting, the money still keeps coming in. In fact, month on month, the equity inflow has risen by almost 15%. It's come in at a staggering figure of 41,136 crore rupees. And as much as experts say that, you know, this is going to be a year of large caps, investors are making a beeline for mid and small cap funds. Look at the kind of money they're drawing in, almost 5,000 crores, 5,100 crores in mid cap funds, 4,700 crores nearly in small cap funds. Contrast this with just about 2,000 crores that have flown into large caps. So small and mid caps still get top billing. The other very interesting trend is NFOs once again. We've got 33 NFOs in December. Many of them are actually sectoral and thematic funds, and together they've pulled in about 13,600 crores, which is also why that sectoral category, that's again swollen in December. Sectoral funds have pulled in over 15,000 crores, in fact 15,330 to be more precise. Hybrids as a category is very, very steady. Both balanced advantage funds and multi-asset allocation funds have both been getting very steady inflows, about 1,500 in BAF and about 2,500 crores in the multi-asset allocation category. So overall, hybrids are doing okay. The total AUM for the industry has dipped a little bit to just under 67 lakh crores. That's because of the outflows in debt funds. And finally, we've just got the SIP details as well. That number is absolutely staggering. SIPs have pulled in about 26,400 crores in the month of December. So there you have it, the equity story intact, and investors are absolutely unfazed with the market correction, time-wise or price-wise.
Thank you, Surabhi, for that. 2025 will be a year of consolidation for the Indian markets. That is the word coming in from CLSA. Speaking with CNBC-TV18, the brokerage firm's India strategist Vikas Jain said he's expecting earnings growth of 13 to 14% in FY25. The brokerage is also betting on FMCG stocks over industrials this year as it anticipates a tilt in government policy towards welfareism.
Further downgrades can be a bit problematic in terms of expectations of Nifty returns. We are at 12 to 13% of credit growth. The earnings number that consensus is baking in for FY26 is Nifty earnings growth is about 16%. We'd be slightly lower than that. I would say that not gunning for big returns, single-digit returns will be, if we scrape through with that, we'll be very happy with that. I think, we've had a great run. This could be that year of consolidation following which started in October. That might very well continue.
The Finance Ministry is ringing in some major changes ahead of the upcoming union budget. Tuhin Kanta Pandey, who is currently the Finance Secretary, has been given additional charge of the Revenue Department. The post fell vacant after former Revenue Secretary Sanjay Malhotra was appointed as the RBI Governor. Arunish Chawla will be the man in charge of divestment. He has been appointed as the DIPAM Secretary. Chawla will also hold additional charges as Secretary at the Department of Public Enterprises and the Ministry of Culture as well. And speaking of the Finance Ministry, DFS Secretary has said that the microfinancing institutions must draw a roadmap to strengthen the sector and become more viable. The Secretary also said that the industry must also encourage repayment of loans digitally and focus on boosting cybersecurity and IT infra. This comes a day after the industry met the government to lay down its wish list for the upcoming budget. The industry asked the government to renew credit guarantee mechanism given to the sector during the pandemic. The sector hopes this move will help reduce pricing costs and help lenders access growth capital.
I presented the sector's contributions, what is the sector's outreach, and also few other issues like what is the current credit quality and what are the requests to the government. So all these things were discussed. It was a very cordial meeting, and as you have rightly quoted, the government has last night also issued a press release on it.
The countdown to the union budget has well and truly begun. India is looking to seize the moment and establish itself as a global economic outlier. The upcoming budget, which will be the NDA government's first full budget after the election victory. Tell us what you want from Budget 2025 by submitting your wish list to the CNBC-TV18's budget box at hotspots near you and on cnbc-tv18.com. This is your budget headquarters. Join us on the budget day for the biggest newsmakers and unparalleled insights. SEBI's stricter default rules have begun hurting companies. The market regulator on November 18th it said that any repayment delay of even a rupee by a day, regardless of the reason, will result in default classification. The circular has also done away with the leniency previously granted to technical defaults during the pandemic. Ritu Singh joins us now with more on the recent downgrades companies are facing on the recent defaults.
Well, SEBI's strict default rules, where even a one-day delay of 1 rupee to any investor counts as a default and triggers a rating downgrade, are proving to be quite challenging for corporate India. And the recent Axis Finance case only goes on to highlight how even minor delays can lead to big consequences. This Monday, we saw India Ratings downgrade Axis Finance's rating to default because of a one-day delay in repaying 6 crore rupees on a banking facility. The company had instructed its bank to pay the lender on the due date of 30th of December, but operational issues delayed the payment until the 31st of December. Now, although the rating was restored later, the temporary downgrade has raised quite a stir. In another instance, an NBFC called Kanak Durga Finance was downgraded to D by CARE Ratings in November and then simultaneously upgraded. Why? Because of a delay in processing a payment of just 841 rupees to one out of its 251 investors. And in this case, the delay was because of incorrect details provided by the investor. Now, all of these events really stem from SEBI's November 18th circular that leaves no room for leniency. Now, while this 1 rupee one-day default rule has been in place for 7-8 years, the regulator had provided some leniency during the pandemic and allowed rating agencies to recognize technical defaults without actual downgrades for events which were outside their control. But the November 18th circular scraps the entire concept of technical defaults, requiring rating agencies to act on every delay, even if operational or technical. Now, while there is the relaxation of a simultaneous downgrade and upgrade, which SEBI has provided to rating agencies if the issuer deposits the payment in an escrow account and shows genuine intent to pay, even these momentary downgrades can cause reputational damage. The rating volatility can even cause stock price volatility. And for funds that are holding the downgraded debt, the knock-on effect is a hit to NAVs and investor returns. So SEBI's goal is transparency, but it is turning out to be a tricky situation for companies.
Thank you, Ritu, for that. Dunzo's co-founder Kabir Biswas is set to join Flipkart Minutes. He'll lead the quick commerce operations for Walmart-owned Flipkart as the head of Flipkart Minutes. This will be Biswas's second innings in the rapid delivery space after starting and scaling up Dunzo for over a decade. Earlier reports suggested that he was stepping down as CEO of Dunzo. The move comes at a time when Dunzo is struggling to keep operations afloat. The National Restaurant Association has strongly opposed new launches from Zomato and Swiggy that promise food delivery in 15 minutes. The association is looking to pursue legal action against the quick commerce firms for allegedly monopolizing the market. The NRAI has also said that this is a clear case of misuse of private labels, adding that the company's move is infringing upon intellectual property rights under the Copyright Act. This move comes after Swiggy and Zomato announced its foray into 15-minute food delivery space with new apps. Ride-hailing platform BlueSmart is set to raise $50 million in a new funding round. The company's pre-money valuation has been pegged at $335 million. The funding round will see participation from existing investors and promoters. The company has already received half of the total fundraise. The round is expected to close next month. Right, big news that we are tracking. TCS has reported its third quarter numbers for FY25. Let's cut across to Rima Tendulkar for the numbers. Rima.
Well, these appear to be largely in line with street expectations. The company's dollar revenue has declined by 0.5% on a quarter-on-quarter basis. Remember, this is a seasonally weak quarter. There are furloughs, lower working days, so that could have impacted the company's top line. So dollar revenue has declined by 0.5%. Margins on expected lines have expanded by 40 basis points to 24.5%, coming in line with expectations. And the company's profits have gone up by 4% sequentially at 12,380. Prima facie, these numbers appear to be in line with the rupee has declined by rupee revenues have declined by 0.5%. I'm still awaiting what the dollar revenue growth is. The company's constant currency revenue growth in the current quarter is at 4.5% on a year-on-year basis. And this is a slight deceleration compared to the 5.5% growth that we had in Q2. We do not have the constant currency revenue growth on a quarter-on-quarter basis, nor do we have the dollar revenue growth on a quarter-on-quarter basis. The company's deal wins have picked up. So deal wins have come in at $10.2 billion, which compares with $8.7 billion. So there is a pickup seen on a quarter-on-quarter basis by nearly 17%. And even on a year-on-year basis, the deal wins are up 25%. So this is largely it's slightly higher than the company's comfort band. They've always spoken about $7 to $9 billion being the quarterly deal win run rate. The attrition for the company has inched up marginally. It now stands at close to about 13%. And I think in the prior quarter, it was at 12.3%. But again, at 13%, it's still within the company's comfort band. They've spoken about 11 to 13% as the comfort band for attrition. It's just that it's come in at the upper end. The total workforce is at about 6,07,000. And I think this would be slightly lower compared to what they had in the prior quarter. So the company's net headcount would have fallen in the current quarter. I think quarter on quarter, it would be a drop of a little more than 5,000 employees. What I'm just trying to calculate is the performance of BFSI has picked up. So on a year-on-year basis, the BFSI revenue has come in at 0.9% sequentially, which is higher than the 0.1% that we had in the prior quarter. So the resilience and that little bit of green shoots demand recovery in BFSI still very much continues. Telecom is still a weak spot. Telecom revenues are under pressure. And in terms of geographies, North America has declined by 2.3%. Again, these are year-on-year numbers. India revenues are now at about 9.8% of the revenues. So India revenues are up close to about 70%. So there would still be a sizable contribution coming in from BFSI. I think we have some guests joining in to give us their initial comments. We have Sandeep and Moshe with us on the show. Sandeep, if you can hear me, could you give us your initial thoughts on TCS's numbers?
Yeah, so I think, it is a inline kind of number as rightly mentioned, but I am little positively surprised with the slight inch up in the attrition number because, in this industry, if attrition goes below 11%, then it also is a sign of lack of demand. So fortunately, that has gone up a little bit, and while after 15-16% it starts hurting the margin, but at 13-14% it is also a sign of recovering demand. Secondly, the deal win numbers are good. Rest of the numbers are in line. So I don't read too much, I would say, because the stock has also corrected a little bit recently. So I think it is an inline kind of number, I would say, and Street will not be disappointed with this.
But Sandeep, shouldn't we see the rising attrition in context with the overall headcount, which has fallen on a sequential basis?
No, absolutely. So they will have to hire now more aggressively, and that will also, but at the same time, attrition is a very funny thing in this industry. You will have to always look at it from both sides because it goes substantially, then it starts hurting margin very badly. But again, it indicates there is a strong demand. And at the same time, if it goes below certain percentage, your margins may improve. But at the same time, it indicates that growth will be muted going forward. So I would say that, they will have to hire more aggressively. That is a concern. But at the same time, this inching up a little bit is showing that your growth is coming back.
Okay. The dollar revenue for the company is at about $7.54 billion. And this is a decline of 1.7% on a sequential basis. And again, it's slightly lower than what we were anticipating. So Q3 has been subdued in terms of the overall top line. The revenues have come in modestly lower than street expectation. Dollar revenue growth down 1.7% sequentially, lower than the CNBC-TV18 poll of a decline of 0.6%. And even on a year-on-year basis, revenue growth at 4.5% is a deceleration compared to the prior quarter. One of the other explanations for that could be that the BSNL deal, the contribution of the BSNL deal peaked off in Q2, and the incremental contribution from BSNL in Q3 is lower than what we had in the prior quarter. And this has come in a seasonally weak quarter, so that could have also hurt. Devin, so there's nothing very exciting in the numbers. You could call them in line, maybe modestly lower on the demand front. But given that the stock itself has been a bit subdued, even today, it ended with a cut of about 1.7%. Do you think these kind of numbers are in the price?
So the market has priced it, I think, to the perfection as I see it, Rima, because I think expected numbers have come in and the market has adjusted the stock price, which has fallen by about 10% from its high level. So that part, I think one would say that, yes, market is right in, I think, judging the numbers. On the other side, what one could possibly ask for is, I think, and as I see it little favorable on the attrition side. If 13% attrition has happened, it means that I think the company is very fast adopting the AI way of working, which is very fundamental for saving the cost going forward. Should that get confirmed from the management commentary, I think this would probably help in de-rating the stock in the marketplace as I see it. The second point, I think, which one would like to definitely get more amount of clarity information from the management commentary, whether I think the respective verticals, be it BFSI or be it engineering R&D through the manufacturing, are they fetching more number of deal wins? I think I heard you saying that I think they have got 17% QOQ increase in the deal wins versus YOI 25%, which is a good sign. Now, whether this is coming from BFSI and manufacturing, if that gets confirmed, then probably I think you're also asking for the confirmation on the margin front. In my viewpoint, I think both these commentaries are going to be very important role play hereafter. And last but not the least, I think would like to see how exactly they see the scenario emerging US, UK, and other emerging markets, including India, as far as I think the demand for services are concerned. Whether the company is shifting into largely to data center and the AI, that also I think is a commentary that one can possibly ask for.
Okay, so while the overall revenues, the dollar revenue has fallen by 1.7%, as per my initial calculations, it appears that BSNL, the India revenues, here we're, the India revenues in absolute terms has actually gone up by 8.5-9% on a quarter-on-quarter basis, which means the dollar revenues ex of BSNL have fallen by nearly 2.5%. So the international revenues or the revenues ex of the BSNL contract, which has been pumping the company's revenues, is actually fairly muted. And that, according to my initial calculations, maybe I'm wrong, but we'll wait for some clarification. I think that's down close to about 2.5%, and that is a bit disappointing. Secondly, even the BFSI contribution in the current quarter was about 30.5%. And in the prior quarter, if I'm not mistaken, it was close to about 30.8%. Yes, the BFSI contribution has come down on a sequential basis. So BFSI revenues have actually fallen by nearly 2.6% sequentially. And considering that BFSI was a space where we had a pickup and the street was hopeful across the board, the industry was talking about a pickup in BFSI, at least that hasn't translated. BFSI revenues have fallen by 2.5% in dollar terms on a quarter-on-quarter basis. So that is a bit of a concern. And again, BFSI is propping up the company's revenues. But on the whole, as I said, revenue performance is slightly lower, modestly lower than street expectations. Margins in line, margins expanding to 24.5%, driving a 4% jump in the company's profitability. Deal wins have picked up sequentially by 17% to $10.2 billion. Headcount is down, attrition is up. So it's sort of a mixed quarter, but with a negative bias. Sandeep, come in. I don't know if you've had a chance to look at the performance of BFSI in the current quarter, and even the contribution of BFSI. The BSNL deal, the India performance. How is it ex of that?
No, X of that, it is definitely muted. But as I said that, people see forward looking how the outlook looks. So from that perspective, I think the deal win number is really encouraging. 25% growth year over year is good. And also remember, as I said earlier also, that stock has corrected quite a bit. And for TCS kind of stock, that kind of correction is quite high. So I don't see people will read too much negative from here. That is the way we look at the company.
Okay. Yeah, the deal wins have been very strong and well-rounded across the industries, as K. Kritivasan says. BFSI returning to growth, continued stellar run of regional markets, and early signs of revival in discretionary spend in some verticals gives us confidence for the future. That's an important line. Early signs of revival in discretionary spend in some verticals gives us confidence for the future, because this sets the tone for Q4 and what the company and the industry is likely to do in FY26. Because so far, discretionary spending, the recovery was limited to BFSI. If they're now talking about it coming through in other verticals, in some verticals, that would be a positive. Gurmeet is also joining in. Gurmeet, first, your comment on the Q3 numbers, and then juxtapose it with the way the stock has been performing.
I think it's in line with the price action. Maybe you can say it's a mild miss because had the numbers been even static minus the BSNL deal, I think, and seen some growth, probably you could have won more confidence that there is a pickup and the negativity around IT is behind us. But deal wins are encouraging, upwards of $10 billion. Also, the retail and consumer vertical has done better. The BFSI is flat. Manufacturing is actually mildly negative. So vertical-wise isn't much. So my sense is we have to probably wait a little bit for the management commentary. I think it's basically the earnings have gone up led by margin. One thing which could obviously is positive is the two dividends, right? One is the interim one with a special one. They did it last year as well. Last 2 years they've been paying almost 4 to 5 times along with a buyback. So even I think the price action could be very muted considering what the numbers are, because the stock has fallen from 4,500 levels to 4,000. But considering it's a seasonally weak quarter, I would say it's neutral to maybe a mild miss, Rima.
Gurmeet, Sandeep, Deven, thank you very much for joining in. The company itself in their press release says strong TCV. TCV stands for total contract value or deal wins in a seasonally challenging Q3 positions TCS for long-term growth. We're going to slip into a very short break. Archana, with that, it's back to you.
Thank you, Rima, for that update. And with that, it's a wrap on this edition of Business 360. News and updates continue right here on CNBC-TV18.